Hi, I'm Paul Bechtold, RVP of Debt Elimination Programs at Gordon Marketing. Now with me today, I have my partner and good friend, Troy Culver, National Life Marketer for Fully Underwritten Life at Gordon Marketing. Today, we want to talk to you about money in motion.
Money in motion? What do you mean?
Well, Troy, most people tend to think of their money in static principles. They think of, I get my paycheck, I bring it home, I park it in my bank account. Or I take a portion of my money and I pay off a credit card. Or I take a portion of my money and I save in my IRA or 401k. And they tend to think of places that they park their money. But the reality of it is people that make a lot of money, they don't leave money sitting. Money sitting still doesn't do anything for us. So let's just pretend we had a $100 bill sitting on the table here. That $100 bill, oh man, those Franklins give us a nice warm, fuzzy feeling, right? But they really don't do anything in and of themselves,
Right.
sitting still. It's when we put money in motion, when we have money for food, food for money, money for car, car for money, money for clothes, clothes for money. That's the value of money, is when we put it in motion.
Well, how do we put it in motion?
Well, let's look at how a bank makes money first, okay? Would you agree that a bank has a pretty good financial model, right?
Absolutely, they do.
Probably the best out there, right? So what does a bank tell you to do with your money? They say,
Give me your money.
give your money, put it on deposit with me, and put your money at rest, and we'll pay you. What does the bank pay right now?
Oh my goodness, that's such a low number.
Yeah, like 1/10% interest, right? What do they do the minute you put your money at rest with them? They don't have
Everybody
everybody.
loaning it out.
Yeah.
They're putting it to use.
Yeah, there's no box in the back that has Troy Culver's name on it. Now write Troy Culver on the front of that $100 bill. They immediately loan that $100 bill out at a higher rate. So the first way a bank makes money is on margin. Okay, they give you 1/10% interest, loan it out at a higher rate. Okay. The other thing they do is they have the luxury through the Federal Reserve of using fractional reserve lending, right? And then the other thing they do is they have compound and amortized interest they can take advantage of, right? So they've got a lot of money in motion and they're creating leverage on that money, right? So that's the key element here, is they're leveraging their money in a manner that makes them a profit.
Is that something that we could do?
There's absolutely could, right? Through the products that we sell, okay, we teach people how to kind of replace the banking function in their life and become their own bank, right? And the beauty of life insurance as a solution is when we put our money in it, we can borrow against that policy, keep earning interest on our money, and go out here and do other things with the money. We're getting two uses on our money at the same time.
What's the risk? There's got to be a catch.
Well, like anything, it's not free money, right? And we want to, when we take loans out, we want to eventually, with future cash flow, replace that repay that loan back, right? And this is, again, is where people think statically, okay? When we have our bank account and we put a deposit in and we spend it, we replenish the bank account, right? We would do the same thing with the life insurance policy. We want to take a loan out, put the money to use, but then with future cash flow, repay the loan back and then repeat the process over and over again.
No, that is great. And is this process confusing to agents or to clients to pull money out and put money back in?
It can be at first, okay, but it's like any other habit. So a good example is people would pay cash for things when all of a sudden they start using a rewards credit card, for example. Okay, they start charging everything on it. Okay, they've added another financial element to it, but they're not spending any more money than they already were before, right? All they're going to do is first use the card, and then before 28 days is up, so that there's no interest charge, take the cash that they were going to spend to pay the card back. And then they gained another financial element in the form of rewards points or cash back that they wouldn't have gotten by paying cash.
Everyone does that nowadays.
Yes, right. And they could do the same thing by adding one more thing to their financial universe in terms of the life insurance and learn to become their own banker.
What would you say would be a downside? Is there a downside?
Downside is there's no free money out there. There's no free lunch, right? You're not going to get something for nothing. You have to be a little bit disciplined and you have to be a little bit intentional in your finances, but with just a little bit of education, a little bit of discipline, you can put yourself in a much better position.
And are there times where if you leave your money in one spot, that's a higher risk?
Um, Well, leaving your money at rest sometimes might make sense if, say, somebody were to pay you enough for the use of your money. Okay, it's all about what is your financial incentive to leave your money at rest and let somebody else use it. If not, otherwise, we want to keep our money in motion where it's working the most for us and it's creating the most leverage.
Makes perfect sense.
Unfortunately, we could talk about this all day, Troy. But what we really want to tell all you folks out there is if this sounds intriguing to you and you want to learn more, give us a call so that we can give you a little bit more information, maybe run a couple illustrations for you, show
Mhm.
you some real live examples. Troy, if they want to do that with you, how would they get a hold of you?
You can reach me at Gordon Marketing, so T Culver at gordonmarketing.com or extension 10900.
Okay. And I'm Paul at gordonmarketing.com. My number is 317-626-3054. We'd be happy to take your call and help teach you these concepts and put you in a better position with your clients and put more money in your pocket. Be sure to subscribe to our Selling Life and Annuities channel. Be sure to click the notification bell so that you know when a future episode of Selling Life and Annuities comes out. Like, comment, and share to spread the word with both other advisors as well as your clients. But unfortunately, we've run out of time today. On behalf of Troy Culver, National Life Insurance Marketer at Gordon Marketing, Paul Bechtold, RVP at Debt Elimination Platforms, we'd love to say happy selling.